How's it going, everyone? It's Sam. I want to do an update video for you on what I'm going to be doing with my NAT stock going forward and my DHT stock, which is very similar to Nordic American Tanker, and just talk to you about when I'm going to jump out of the stock and what I'm going to be looking for going forward, because I think it's important to have a getting out plan when you are looking at these short-term investments. So I want to talk to you first, though, about how I appreciate you guys. I hit 250 subscribers, which is more than I ever thought I'd hit. I've been doing this for over a year, probably closer to 2 years, before really anyone started watching my channel, and I really appreciate it. I am investing $5 more for every new subscriber, so I will be talking about the stock that I bought today from the 34 new subscribers that I got just over the last few days. So I'll play that video for you later and talk to you about what I'm buying with that money. At the time that I put this order in, I had only gotten to 248. So I put in enough for $160 or 32 new subscribers. So I'll be going over that later. But first I want to go through the DHT and the NAT stock. So I should preface this by saying that I have a very small position in these stocks. I have about $200 between the two in them, which is about 1% of my portfolio. And this is more to test the waters. I think that there's value there, but I'm somewhat risk averse. So I have put in a small amount, and as time goes on, when I am more comfortable putting more money in these small positions, I'll do more of this. But I put $200 in, and for you it might be a lot more than that. But I think you can take some of these things away and apply them to your own portfolio. So before really knowing when you should jump in and out of a stock, it's really important to know how much value that stock provides. So the question is, how much are NAT and DHT earning for you? And there is something that I found that might be a very good indication of the money that these two companies are making. So if you go to NAT's site, and I'll play it here for you. If you go to their site and scroll down, you can look at their report for the last week for the tanker market. So it looks like they released this just Friday, and they look at tanker market indexes. So you could see 2 weeks ago the cost of all these different tankers, and then you can also look at last week's different costs. So you can look at 2020's cost for all these different tankers for a single day voyage. You can look at last week's, and then you can look at that current week's. So really last week is 2 weeks ago now. You can see how it's changed over time. So I will note that it is gone down this last week. So this is the 8th, so last Friday. So you can see that the cost has gone down pretty significantly, especially if you go down to the bottom at the index. It's gone down to 52.7, which is actually below the year-to-date rate. Now, that is a lot higher still than last year's. It's still 2.5 times, so still great, but it is down significantly from just 2 weeks ago. So that is something to take into account. That's something that I'm going to be looking at going forward here. But I have DHT and NAT kind of lumped in here for the same type of scenarios. So before I go any further, if you don't mind subscribing below and hitting the like button, that really helps out. But I do want to ask you, what are you doing with NAT stock? What are you doing with DHT stock? You know, when is your jumping out point for these stocks, and what are you looking for going forward? I'll let you get back to it though. Just make sure you comment that down below. So if the price goes above $10 before their next dividend is announced, I will jump out. I will have made already 200% on my initial investment, and I'll get out. When they announce the next dividend, I think that'll be a good representation of how they did in this quarter. So if they announce a large dividend, I will be more bullish than if they announce a little one, because they tend to pay most of their earnings out as dividends. But unless they announce a very small dividend, I will stay in the stock through the ex-dividend date. So I want to collect that dividend and be there for the ex-dividend date. But then if they announce the dividend and it's a sizable dividend, and let's say the stock goes up to $8 or so, then I'll jump out. So I want the ex-dividend date, but if it's above $8, then I'll jump out. If it's still below $8, I'll probably hold for a while to see what it does, because I think that there is some value in holding on to it even through those dividends if the price hasn't gone up. But I'll kind of have to reevaluate at that point whether I want to stay in the stock or jump out of the stock. I think it's still a good value now, but if in a few months it hasn't gone up and the dividends aren't great, I'll have to reevaluate, but I will do a video at that point. So that is kind of where I'm at for NAT. I'm going to do the same thing with DHT, just with different numbers obviously because I bought at different prices, but the percentages will still be the same. Now I'm still bullish on the stock. I'm not buying anymore right now just because I'm comfortable with the position that I have right now, but that could change really at any time depending on what's happening on the stock and in the stock market. So that's where I'm at there. Now I do want to talk about the stocks that I am buying today, and I actually bought more Berkshire Hathaway. And the reason for that is because Berkshire is still just a value play. Its PE ratio is right around 10 right now, and the stock has dropped, so I am buying at about $15 per share, less than my cost basis. So I think it's a really good value. A lot of people have talked about how they have underperformed the market over the last 10 or 15 years, but when you look at the last 10 years, we have had really good years in the last 10 years. So a lot of the growth stocks have just been going crazy, and Berkshire is not buying growth stocks. So they buy companies that earn money and pay out dividends. So they are very stable compared to the general market, and they're not going for those crazy growth opportunities. They are someone that's going to earn a significant amount of money every year and just try to build on that. So they've been able to grow consistently, but they haven't grown as much over the last time period as the S&P 500. But if you look over a long range of years, they've destroyed the market. So I think that they are a good hedge against a market downturn, because if the market goes down after all of this that's going on right now, Berkshire's still going to be there. They have a ton of cash, they are really stable, and they might be able to take advantage once the government stops bailing out all these companies, and they might be able to secure some really good positions in companies. So I think that they're a really good hedge against the downside risk of the market, and I just wanted to be invested in them more. So if you guys have any questions about that, leave them below. Otherwise, I appreciate you guys watching, and I will see you in the next video.